Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Mike Savino. It feels like we've been hearing warning signs about a recession forever. And after a rough end to 2022, a recession is the last thing we need right now in the mortgage industry. Or is it? A few experts told NMP staff writer Katie Jensen how you can use an economic downturn to your advantage.
The question's just going to be, where on that scale are we ultimately going to land?
Economists still think we'll end up in a recession this year. The question is just how bad will it be? In the mortgage industry, we have a second question. How would homebuyers react to a recession?
A little recession is good for us. Too much is bad.
Experts say talented LOs will be able to take advantage of a recession, especially if it's mild. Mark May 10th on your calendar. MBS Highway CEO Barry Habib says that's when rates will really start to fall.
You're going to unleash a horde of additional buyers into the marketplace.
We saw employment explode in the mortgage industry during the refi boom, but LOs who haven't learned how to work in a purchase market are less likely to survive. Some have already given up.
There's a big difference between the loan officer that does refinances and one that is a purchase business loan officer.
You have to know how to adapt to market conditions and understand new mortgages like non-qualified mortgages. Guide your borrowers to the mortgage that's right for them.
Make sure that when you are talking to people, you are spending a lot of time with them in terms of educating them and really showing them all their different options.
Personal debt is also rising across the country. You should understand when a homeowner is better off with a cash-out refi, home equity line of credit, or some other debt consolidation option.
Today, if you took an average home, 58% of it is equity and 42% is mortgage. You contrast that to 2008, where only 19% was equity and 81% was mortgage.
You can learn more about how to master the market during a recession in Mortgage Banker magazine, available now at mortgagebankermag.com. Reporting for The Interest, I'm Katie Jensen.
Thanks, Katie. And those fears of a recession seem to be weighing on lenders' minds right now. Credit standards loosened just a bit in March, but with the threat of a downturn looming, those standards are still close to their tightest level in a decade. The MBA says its mortgage credit availability index improved by 0.4% to 100.5. A score of 100 is equal to the standards we saw back in March of 2012. And the MBA says credit requirements haven't been this tight since 2013. Standards relaxed the most for conventional loans, while government mortgage credit requirements actually got tighter. And that's bad news for first-time home buyers already struggling to find a way to buy a home. Borrowers also had an easier time getting a jumbo loan in March, but the MBA thinks that could change as banks tighten their standards amid ongoing volatility in the banking sector. After the break, HomePoint hopes its deal with the loan store will help right the ship, but at least one analyst is skeptical.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. Fitch Ratings is lowering its rating of HomePoint Capital because the company is getting out of wholesale. The downgrade comes just days after HomePoint announced it's selling its wholesale division to the loan store. Fitch dropped HomePoint's rating from B to B- and put the company on a negative ratings watch. That means analysts think another downgrade could happen in the near future. Fitch says it's making the downgrade because the sale means a dramatic change in HomePoint's business model, and it also comes as HomePoint is dealing with turnover among its executives. CFO Mark Elbaum left the company a week ago for Penny Mac, and President of Originations Phil Shoemaker is going to the loan store. On a plus side, Home Point has plenty of cash on hand and doesn't have much debt, but Fitch says it could downgrade its rating even further if the Lone Star deal doesn't return Home Point to profitability, if Home Point needs some of its cash to cover operating expenses, or if it has to take on more debt. In other news, Zillow has agreed to pay $15 million to settle a long-standing complaint that the company withheld information from investors. A group of investors claim Zillow failed to tell them about a federal investigation into a co-marketing program between lenders and real estate agents. The program, which is still active, lets lenders pay a portion of a realtor's cost to post listings on Zillow. The CFPB investigated the program years ago but decided not to take action, and investors claim Zillow failed to tell them about the severity of that investigation, thus pumping up its stock value. Zillow denies any wrongdoing and says it's only settling to avoid more legal costs. The first complaint in this class action lawsuit was filed all the way back in 2017. A federal judge still has to approve the settlement. A hearing is scheduled for August. Coming up, a veteran in the mortgage industry gets a unique honor.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. A longtime leader in the mortgage industry is getting an interesting honor. The Navy is naming a submarine after John Dalton, who was the 70th Secretary for the Navy. He started his military career as a submariner, and before becoming Navy Secretary, Dalton was named head of Ginnie Mae in 1977 by President Jimmy Carter. He was later named to the Federal Home Loan Bank Board, and he would eventually become chairman of that board. Dalton is now a board member for the mortgage tech company Zactus. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.